Manhattan's luxury market pulse shifted in Q3 of 2025, and the current data is revealing some very interesting information for buyer opportunities that many agents may be overlooking. Even though the inventory remains tight, the numbers are trending in a very interesting direction that could provide a window of opportunity for prepared buyers. I'm Dewey Moss, and after 30 plus years of living in Manhattan and selling millions upon millions of real estate, I'm breaking down what these market shifts mean for your buying strategy. And if you want some of the insider tips I use with my own exclusive clients, click on the link below to download my buyer's cheat sheet. Be sure to subscribe and hit that notification button, and let's get started. Now, I mentioned earlier that inventory remains tight, and that's the story we have seen now for over a year. The inventory is just remaining tight. Currently, we're at 623 listings on the market, and that's down a whopping negative 43.2% from last month. Now, that's not a big surprise because you have to remember that in Manhattan, our main selling seasons are the spring and the fall. Summer is a heavy rental season, but not a huge sales season. So for everything to have dropped over the summer, that's not surprising. What is interesting about supply, however, is that it is negative 10.7% down year over year. So that tells you that the inventory remains tight. With some of these market shifts that are coming ahead, it's going to be very interesting to see if that remains the case. Now let's look at the contract activity. It's actually holding strong at 811 contracts signed, and that's a good strong number considering that, again, in this third quarter, we're not in a major sales season. We're about to enter one for the final quarter, and just negative 2.6% down year over year. So pretty standard numbers going here in the summer months and heading into the fourth quarter. Now let's look at the liquidity chart, and this is a measure of 30 days between supply and demand in the market. We are at 655. Now that's down quite a lot from last month. Again, the summer, there's not going to be a lot of liquidity in terms of sales going on, but it's only down about 2.5% over last year. So again, liquidity is about where we would expect it to be for the third quarter. Now let's look at the market pulse number. Market pulse is a measure between supply and demand and lets us know if we're in a buyer's market or if we're in a seller's market. If the number is above zero, then we're trending towards seller's market. If it's below zero, then we're firmly in a buyer's market. But these numbers need to be pretty far above zero or below zero for us to be in a true seller's or buyer's market. Right now, we're at 0.55. We have been in a fairly neutral market for quite some time now. Now, in a neutral market, that does mean that sellers have to use a lot of common sense when they're making their listings. They have to understand what's going on in the market and what buyers are looking for. On the flip side, for buyers in a neutral market, there are some opportunities out there. You may be able to find a little bit better of a deal than what you would if we were in the standard Manhattan market. Now, with interest rates beginning to trend down, that usually means that prices are going to go up. Buyers want to always look at the interest rate, and when something gets lower, usually the market opens up a little bit with buyers entering into the market or buyers who have been waiting on the sidelines coming back into the market. But the prices are going up. It's interesting because if you were to choose between the two, I would always choose the interest rate. And why am I saying that? Because you can always refinance if a lower interest rate does become available. But once you marry that price, that's going to be the price of your mortgage or the cash price that you have paid. So be careful as a buyer to weigh out those options. Look for when you may be able to get a slightly lower price and hope maybe in the future you can refinance. But on the whole, the interest rates are coming down. We're probably going to see a spike in price in Manhattan shortly. Okay, quick heads up. If you're thinking about buying in Manhattan, don't go into it blind. I've created a Manhattan buyer's cheat sheet that helps you with some of the insider information, some information about the process, and some tips to help you navigate what is a very complicated market in New York City. It's perfect if you want to feel confident about buying and want to avoid some of the mistakes that many buyers make here in Manhattan. Manhattan. You can just head over to DeweyMossRealEstate.com and fill out a quick form, and we will get that buyer's cheat sheet right to you. Okay, let's continue on with our Q3 market report and some very interesting data points. Now, I mentioned that some of the prices in Manhattan may start going up as the interest rates are going down. Now, that can be evident here in the median sales price. We're currently at $1,217,500. Now, that's down 0.9% from last month. Again, summer season, prices having to be low for people who are selling, but it is up year over year. So the median sales price has gone up from this time last year, and I suspect we're going to start seeing it increase if the interest rates continue to trend downward. Price per square foot is also down from last month, but up year over year. And you have to remember that price per square foot is often a measure just of condominiums in New York City, because when you're buying shares in a co-op, we actually don't know the square footage of many of the co-op units. In fact, you're not purchasing the square footage, you're purchasing the shares. But the current price per square foot is $1,399 on the average, and that's down 1.3% from last month, but up 1.9% year over year. So again, we're seeing those increases in the price that I was discussing. Now, the average listing discount, and that is the discount that buyers can expect to get off the listing price, is currently 4.1% for all of Manhattan. Now, you have to remember Manhattan is a city of neighborhoods. It's not one price fits all. So in Chelsea, for example, the discount may be a little higher than it is in the West Village, where there would be very little discount. And then the West Village would be extremely different from, say, the Upper East Side or Harlem or the Upper West Side. Each one of these neighborhoods are going to have a different kind of discount because it's a different market in each neighborhood, and in fact, a different market in each building. So this is a broad average, but it is at negative 4.1. So a buyer on the average can expect to get about a 4.1 discount off the listing price. Now, a very important bit of information for both buyers and sellers in the market are the days on market to discount, that comparison. Now, sometimes it's difficult to utilize this number because we're not a normal market in New York City. It takes up to 3 months, maybe 4 months to close. So if you can imagine, if you had one deal fall through and you were on the market for maybe a month, all of a sudden that's 4 or 5 months that you've been on the market, and it begins to make your listing look stale, when in reality you had a contract on at that time. Think about 2 deals that maybe fell through. You're looking maybe at 6 months, 7 months. So you have to take the story into account. However, if it's a listing and we're talking about the first offer coming in, and if it's below 60 days, you can expect that the discount may be around 2%. Now, again, that's 2% at 60 days that you may have to take off of your listing price in order for the unit to move. But if you're looking at 120 days plus on the market, you are definitely going to have to bring down your listing price at least 10%. Those are the data points that we have seen. If it's greater than 60 days, probably 2%. Greater than 120 days, you're really gonna have to think hard and make additional 10% cuts to be able to move the listing. Okay, so what does all this mean for Q4? Well, it will be interesting to see what happens. It'll be interesting to see if the interest rates continue to shift down, if some of those buyers that have been on the fence are going to come to life and really start seriously shopping. Plus, we're starting our final sales season of the year here in Q4. So from about this time in September all the way until just the beginning of November, maybe a little later into the Thanksgiving time, that is our next sales season. It is secondary to our spring sales season, but usually a very healthy market. So it will be interesting to see what happens and see where these numbers trend, and if there's a significant difference between Q3 and Q4 coming up, and that will most likely tell us a lot about what to expect next year. So I hope you found this information informative and helpful. Manhattan's real estate market and the processes that you have to go through to buy are unlike any other market in the nation, and that's why I created my buyer's cheat sheet, just to give you an idea of some of those processes and how to handle them. So if you want to take advantage of that, just head on over to deweymossrealestate.com. You'll be able to fill out a quick form and download that. The link is below in the message. Please take a moment to like, subscribe, and hit that notification button, and I'll see you next time.